This is exam 2, the review for this. So for question 1, which is not true about the realization principle? So let's read the options. Under this principle, income is realized when the transactions results in a measurable change in property rights. That is correct. The concept of realization for tax purposes closely parallels the concept of realization for financial accounting purposes. That is true. Under this principle, income is realized when a taxpayer engages in a transaction with another party. That is true. Under this principle, only unearned income is realized. That is false. Let me go back. Okay. This method of accounting recognizes income when earned and expenses are deducted when incurred. Okay, when earned and when incurred. That would be the accrual method. Ruby received a check on December 15, 2022 for tax services provided on October 15, 2022, but cashes the check on January 2, 2023. When will the income be realized? Okay, so 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 for tax purposes, individuals are on a cash basis. So because she received because she received the money on December 15th, the income will be reported in 2022. Which of the following is earned income? Annuities? No. Wages? Yes, because you physically have to go work to get a paycheck. Royalties? No. Rents? No. Okay. Blank occurs when an investor sells or trades stock or securities at a loss and within 30 days either before or after the day of sale buys substantially identical stocks or securities. This is a wash sale. Which of the following is not a common qualified fringe benefit? A salary is not a fringe benefit. In what schedule is rental income reported? Okay. Guys, whenever I take the CPA exam, this is these are all questions that were very similar to what I would looked at. So just make sure that whenever you guys are taking the exams, you just kind of remember this in the future. So rental income is Schedule E. Okay, Schedule C is business income. Schedule A is standard / itemized deductions. Schedule B is dividend and interest income. So Schedule E is the correct answer in this case. A taxpayer who is an active participant in a rental activity may be allowed to deduct up to blank of the rental losses. Okay, guys, remember tax is you have to pay attention to the wording. So this is active participant right here. So that would be 25K. The deduction of interest paid on qualified education loans is the amount of interest paid up to $2,500. Which of the following is not part of the 3 different categories of income covered in Chapter 6? So, realized income was covered in Chapter 5. When taxpayers convert a traditional IRA into a Roth IRA via direct transfer or rollover, the amount is taxed at ordinary rates. Qualified distributions from blank are not taxable. So the answer for that one is Roth IRAs. Health insurance premiums by self-employed taxpayers are deductible. So if you are self-employed and you pay for health insurance, then it is deductible. But if you work for an employer and don't have any business whatsoever, then that is not deductible. Moving expenses are deductible when you are a member of the armed forces. Guys, remember, tax law changes. Back in the day, whenever you did move, you were able to deduct it if you use Schedule A. But now, tax law changed, so only if you're an armed, well, there are a couple of exceptions, and one of them is you have to be part of the armed forces. Other than that, you can't really deduct it. The following deductions are allowed in Schedule A except, okay guys, political contributions are not deductible in Schedule A. This is very important that you guys know this because in the following questions, you guys are going to see a lot of limitations involved and the stuff that shouldn't be deducted. So political contributions, not deductible at all. Charitable contributions are deductible. Property taxes are deductible up to $10,000. If you're married filing separately, it's $5,000. So, mortgage interest, there is a limitation if the interest is more than a certain amount. Don't quote me on this, but I believe it's $750,000. And the limitation is not part of the. We don't cover that in this particular exam, but that is part. There is a limitation on how much mortgage interest you should take. Question 16. Leah moved from North Carolina to Texas for a job and bought a house. She's preparing her taxes as her head of household. Okay. She said she paid $11,000 property taxes. Remember, there's a limitation, so $10,000 is the max we can take. She paid $6,000 in mortgage interest. There's no limitation, so $10,000 plus 6 is $16,000. Gave to a political campaign $1,000. Remember, this is not deductible, so this is just information that we don't even need to know. And gave to charity $10,000. So 10 plus 6 plus 10 is 26. So we're gonna do that. Remember, there's a limitation there. Okay, Clarissa withdrew $250,000 from her 401k to travel the world. How much is her penalty? $25,000. It's 10%. Remember, this question only asks for her penalty. She still has to pay ordinary rate for withdrawing the $250,000. So whenever you guys put money into your 401k, please just assume that you're not going to get it out until you retire. So if you don't think you're going to, be able to, wait till retirement, just don't put it in there because then you're going to be looking at a 10% penalty. And you don't want to be paying penalties. Tony had a Schedule D capital loss of $32,000. How much can he deduct this year? He can only take up to a $3,000 loss. What is the AGI limitations for cash contributed to a public charity? So the answer is 60%. You guys have to remember this for questions that are coming up. So 60% AGI limitation for public charities. Which of the following is not a common medical expense that can be deducted in your tax return? Long-term care facility is. Non-prescription medication is not. Transportation for medical purposes, yes. Prescription medication, yes. Okay. There is no limitation for qualified business income. False. There is limitation for QBI. If Martina had $26,000 in medical expenses, what portion can she deduct if she uses the standard deduction? Check this out, guys. Standard deduction. You can only take the medical expenses if you take the itemized deduction. And in this case, no additional information is given. So, right here it says that she's definitely taking the standard deduction. So, the standard deduction. So the question says, what portion can she deduct if she uses the standard deduction? So for medical expenses, 0. The American Opportunity Tax Credit can be used in a student's first 4 years of post-secondary education. True. The tax law imposes a blank on a taxpayer who does not file a tax return by the required date. So that would be a late filing penalty. Okay, the highest penalty owed when combined with the late penalty payment and the late filing penalty without fraud is 47.5%. All the following are tax credits except, okay, the child tax credit is a credit. The earned income credit is a credit. So the itemized deduction is a deduction, not a credit. There's a big difference between deductions and credits. So itemized credit is not a thing. There is an energy credit. So kids are subject to kiddie tax on earned income. False. Kids are subject to kiddie tax on unearned income. There isn't any limitations on business losses since you are actively working on the business. False. There are limitations. Leslie donated $100,000 to a qualified public charity. How much can she deduct if her AGI is $50,000? Guys, this is important. Most people would just take $100,000 because it's one of the questions or one of the answers. But remember, there is an AGI limitation, so 50,000 times 60% is 30,000. So that is the max. The other 70,000 is going to be rolled over to next year. Taxpayers who are traveling for the primary purpose of receiving essential and deductible Medicare cannot deduct lodging. False. Which of the following is not an example of a specified service trade or business? Dog walking. QBI from a C corporation is a deduction. Remember right there that C corporations are not. If a single taxpayer contributed $5,000 to a political campaign, remember, not important, not relevant, spent $16,000 in property taxes. Remember, there's a limitation, $10,000, and charitable contributions of $22,000. How much will he deduct? So, $10,000 plus 22 is $32,000, and he is single. Okay. Okay. 100 out of 100. Good luck on the exam. The exam will not be exactly like this, but it will be very similar. Just think about the rules that we went over. We might use accrual, we might use cash, numbers will change. Just remember the principles that we went over here, and use these as examples for your exam.